If you're looking for a powerful strategy and a surefire way to identify precise buy and sell signals, you've come to exactly the right place. In this video, over the next few minutes, I'm going to show you the formula for combining three indicators, a method that can dramatically increase your win rate in the binary options market on the 1-minute time frame. This video could be the key to your consistent profits. If you're interested in these topics, stay with me until the end. Hello friends, I'm Babak. Welcome to Option Forge. If you haven't subscribed to the channel yet, please click that red button below the video right now and also activate the bell next to it so you'll be notified as soon as new tutorials and strategies are released and you can be the first to come and try out those strategies. Alright? Today we're not just going to talk about indicators. Today, you're going to learn how to combine three powerful technical analysis tools in such a way that they act like a strong filter and only show you extremely high-quality signals. We've optimized this strategy for the 1-minute time frame and 3-minute trade duration, which can be excellent for the binary options market. Next, I will meticulously introduce each individual indicator step by step and thoroughly teach you their precise and exact settings. Before we delve into the intricate details, there is an extremely important and crucial point we absolutely need to pay close attention to, and I genuinely need to clarify this particular aspect for you right here and now. Indicators are powerful tools, but when used individually, they can give you a lot of false signals. The skill of a true trader lies in intelligently combining these tools to pinpoint entry and exit points with laser-like precision. This strategy is designed to do exactly that for us. Signals with a high probability of success and a low margin of error. Now, I want to introduce to you the very first indicator that we effectively utilize within this particular strategy, and then proceed to carefully add it to the chart. The first indicator we're going to use in this strategy is the powerful super trend indicator. The super trend indicator actually shows you the prevailing market trend, clearly indicating whether we have an uptrend or a downtrend. This powerful tool provides valuable insights. If I go to the indicators section, conveniently located from the left side of the chart, I can readily access the highly effective and widely utilized super trend indicator. I click on this section, and from here you can see that the super trend is located right here. If I click on this once, the super trend will be added to my chart, and as you can see, its settings will open up here. But we absolutely need to carefully change the super trend settings. For this particular trading strategy, I specifically need to set the super trend period value to exactly 7, and we definitely won't be touching or altering any other settings at all. Just so it's much easier to clearly see, I'm going to slightly increase the visual thickness of these lines a bit more on my chart so I can truly see them much better. And then, once that's done, we're completely finished with this indicator and we'll proceed to close its settings. The second important indicator we utilize in this particular strategy is the highly regarded Awesome Oscillator. This specific indicator is indeed a very powerful and quite popular one among many traders. Again, from this comprehensive indicators section, I will click on this button to easily enter this relevant area. If you carefully scroll the page down just a bit, you can clearly see the Awesome Oscillator prominently displayed here. I click on it once to add this indicator to my chart. Actually, this is an oscillator, not an indicator. I'm carefully adding this valuable indicator to my chart. For this particular oscillator, we will utilize the default settings, and there is absolutely no need to make any changes to them whatsoever. And now we have successfully reached the third crucial indicator, which unequivocally serves as the absolutely final and definitive confirmation in this comprehensive trading strategy. That particular and highly significant indicator is, of course, the well-known and widely utilized stochastic oscillator. The stochastic oscillator is also a powerful momentum oscillator, but it primarily focuses on the closing price's position relative to the entire price range observed over a specific defined period. This valuable indicator significantly helps us to confirm potential reversal points with much greater accuracy and confidence, especially when both the Supertrend and Awesome Oscillator give us signals at the same time. So I'm going to add this indicator, which is our final indicator in this strategy, to my chart. Again, I will go to the indicators section, and if we carefully scroll down a little bit, you can clearly see the stochastic oscillator right here. I'll click on it once to add it to the chart. We need to change the settings of this indicator. We only need to set this period to 12, and we don't touch any of the other settings. The overbought and oversold sections, which are the overbought and oversold zones, are fine at 70 and 30. They don't need to be changed. Just so it's easier to see, I'm going to make these lines a bit bolder so I can see them better. Alright, all three of our indicators for this strategy have been added to the chart. Let me give a brief yet comprehensive explanation for those curious friends who may not fully understand what the overbought and oversold zones truly represent. If I wish, I can certainly expand this particular indicator a bit from its current position here, so it becomes much easier to clearly see and comprehend. In the stochastic oscillator indicator, you will observe that you have two distinct lines present here. There is a 70 line, which is prominently displayed right here, and a 30 line, which is precisely located within this specific section. Above the 70 line, when the stochastic goes above 70, it means it has entered the overbought zone, and when the stochastic drops below 30, it means it has entered the oversold zone. Now, what does this mean? It means that when there are a significant number of eager buyers actively present in the market, and these buyers are consistently purchasing a particular currency pair or a specific financial asset, as the price of that asset steadily rises, you can also clearly observe that the stochastic oscillator is simultaneously moving in an upward direction. When this stochastic indicator eventually enters the clearly defined overbought zone, specifically positioned above the 70 line, we then logically anticipate that the market is poised to experience a significant reversal from this point, and the prevailing upward trend is expected to definitively transform into a distinct downward trend. The exact opposite scenario also frequently happens. When the price is significantly dropping like this, as you can clearly see illustrated here, with the bearish candles moving steadily downward, the stochastic indicator also consistently moves down along with your price candles, reflecting the market's momentum. Sometimes when there is a lot of selling pressure, the stochastic enters the oversold zone and drops below the 30 line. When the price action ultimately reaches this particular and critical area, we fully expect the price to decisively reverse its current trajectory at virtually any given moment, and for our established downtrend to then smoothly and completely transform into a new and robust uptrend. Of course, keep this important principle in mind. As I explained to you earlier, we never ever use just one single indicator by itself. It's precisely when multiple indicators are used together that they can truly give us powerful and insightful signals. Relying solely on a single indicator can be risky and may lead us to receive false signals. So, in this strategy, in order to get accurate signals, we need to receive 3 signals from 3 different indicators. If I am going to make a buy trade, all 3 indicators must give me a buy signal. If I am going to make a sell trade, all 3 crucial indicators must simultaneously give me a clear sell signal so that I can confidently execute the sell trade. So, above the 70 line is considered the overbought zone, a critical area where we typically expect the stochastic indicator to cross. These important lines frequently break each other and then subsequently move downward at virtually any given moment. And when the stochastic drops below the 30 line, we should consider the possibility that these lines might cross at any moment and start moving upward, causing the price to reverse from there and the downtrend to turn into an uptrend. Alright, up to this point, we've added all 3 indicators to our chart and set them up. But the most important part is how to combine them. Why is this combination so powerful? Because each individual indicator that we meticulously utilize in this comprehensive trading strategy effectively covers a distinctly different and crucial aspect of the overall price movement and its underlying dynamics. For example, here, the super trend is showing us the trend. The stochastic is giving us a reversal confirmation. So when all three give us a signal in the same direction, it means your chances of success increase significantly. This means entering a trade with a significantly higher level of confidence and conviction. Alright, now let's move on to meticulously finding the specific buy signals that have previously and consistently occurred in the market when utilizing this particular strategy, and then carefully observe and analyze precisely how we could have effectively traded in the market using this very same strategy and successfully taken full advantage of its powerful and reliable signals. The primary and essential condition required for initiating a call or buy trade is that your price candles, as clearly illustrated here, have distinctly moved from their position below the supertrend indicator to a new confirmed position above the supertrend. Additionally, an equally important condition is that the red supertrend line itself has now definitively and visibly turned green, signaling a strong bullish sentiment. When you observe the individual candles positioned above the supertrend line and your supertrend line distinctly turns a vibrant green, this unequivocally indicates a strong and clear buy signal. However, to effectively trade with this particular strategy, we absolutely need to identify three distinct signals working in conjunction. That means all three indicators must give us a signal at the same time. Not just one or two, all three. Pay attention that all three of these indicators must simultaneously give us a single signal so that we can execute a buy or sell trade. So, when I want to make a buy trade, my first signal should be that the candles have moved above the super trend and my super trend line, like in this section, has turned green. This crucial observation becomes my primary and most important initial signal, indicating a strong potential for initiating a profitable buy trade. Following this, the second equally vital signal that I meticulously need to verify and confirm is that the individual bars of my specifically configured Awesome Oscillator indicator are consistently positioned and clearly visible above the central zero line, signifying a robust upward momentum in the market. If you look carefully to the right here, I hope it can be seen in the video. Here we have a line which is the zero line of this indicator, and as you can see it shows us the number 0 here. For a buy trade, the second signal I need to check is that the bars of this Awesome Oscillator indicator should be green, and secondly, they should be above the 0 line. That's exactly what you see happening here. So that's how it is. That's the crucial second signal I need to carefully check for making a successful buy trade. However, the critically important third signal I need to receive in order to be allowed to make a buy trade in this particular strategy is the Stochastic Oscillator indicator. When the green line of the stochastic indicator is positioned above the red line, and crucially, it is also clearly pointing in an upward direction, this specific alignment provides a strong bullish signal. This is precisely what occurred in the example shown here. This particular moment represents when I successfully received my third confirmed signal for implementing this trading strategy, thereby granting me the explicit permission to execute a buy trade. Conversely, for initiating a sell trade, the exact opposite set of conditions must be observed and met. If my intention is to make a put trade, which is a type of sell option, it is absolutely essential that the supertrend line indicator is distinctly colored red, indicating a bearish trend. When this supertrend indicator turns red, it unequivocally means that my overall trend has become bearish. For this condition to be valid, the price candles must remain below the supertrend line, and the supertrend line itself must be clearly red. This is indeed the very first and most crucial signal and explicit permission to initiate a sell trade. The second essential indicator that I absolutely need to meticulously check and confirm is the Awesome Oscillator, whose individual bars should have clearly and distinctly turned a vibrant red color and must be positioned well below the significant zero line. So, in order to confidently execute a successful sell trade, I absolutely need to observe and confirm that the bars are consistently located below the critical zero line and are unmistakably displayed in a prominent red hue. If you look closely here, you'll see that the bars are green, but below the zero line. I absolutely cannot use these particular bars for a potential buy trade or truly rely on them at all. This is definitely not a valid buy signal for me. When these specific green bars are consistently and clearly positioned above the significant zero line for a potential buy trade, then I can confidently consider it a truly valid and reliable buy signal. Conversely, for a successful sell trade, it is absolutely imperative that the corresponding bars are distinctly red in color and are positioned unequivocally below the zero line, signifying negative momentum. The third and equally important signal that I meticulously need to check and confirm for further validation is the stochastic signal, which provides additional insights into market conditions. For a sell trade, in the context of the stochastic oscillator indicator, it is essential that the red signal line should be positioned clearly above the green trigger line and, importantly, be actively moving in a downward direction. This specific alignment and downward movement of the lines within the stochastic oscillator indicator represents a crucial and, indeed, the second significant point that we absolutely need to carefully consider and confirm. For the purpose of executing a buy or sell trade operation, we specifically need to check three crucial indicators within this particular strategy. Furthermore, each of these indicators possesses two distinct conditions that must both be thoroughly checked together. Before we actually go and thoroughly check to see precisely what these particular signals look like, and whether our carefully considered trades would have indeed closed in significant profit if we had diligently traded based on them or not, I absolutely need to share a few critically important points with you here regarding effective capital management and prudent risk management strategies. The cornerstone of success in any trading strategy, especially in the binary options market, is to never risk more than 1 to 5% of your total capital on a single trade. Even with the strongest strategies, losses are a natural part of trading. Our absolute goal is to make absolutely sure that in the long-term run, our overall financial profits ultimately and significantly outweigh our substantial losses. As I mentioned a little earlier, this strategy is optimized for the 1-minute time frame, meaning each candlestick represents 1 minute of price movement, and the expiration time for trades with this strategy is set to 3 minutes. This particular combination effectively allows you to truly make the most of those short-term market fluctuations while still giving the price action enough valuable time to move in your desired specific direction. If you are trading on the Quotex broker, as you saw, you can easily add these indicators directly to your chart. And if you haven't registered yet, the registration links are available in the description section below all the videos, including this one. And as you can clearly see, you can very easily and conveniently access the registration links directly from the detailed description section below. Simply copy the provided link, then carefully paste it into your preferred web browser and proceed to go directly to the official registration page. Furthermore, you can also utilize a generous 50% bonus code for an added benefit. That means after you complete your registration, if you want to fund your account, you can easily copy this code from the page and enter it to get 50% more credited to your account. For example, if you want to deposit $100 into your account, by entering this code, your account will be credited with $150. If you deposit $1,000, you'll get $500 more, so your account will be credited with a total of $1,500. Registering with the Quotex broker is free and instant, and in less than a minute, you can easily sign up with just an email and password and start your trades. I should mention one more point here. Always remember that no strategy is 100% foolproof. But this combination can significantly increase your chances of success. The key point is not to rush, be patient, and only trade when all three conditions are clearly confirmed. Practicing on a demo account before moving to a real account is essential. With consistent practice, this strategy can become second nature to you. Now, let's go and carefully review a few detailed examples together. For instance, consider this specific scenario here. Suppose after this particular candlestick completely closes, you observe that this super trend indicator line has distinctly turned a vibrant red color. And if I were to consider entering a sell trade position in this precise area, let's meticulously examine what exactly would have transpired in that situation. Suppose after this candlestick closed, I wanted to make a sell trade. Let's carefully review the conditions together. When this particular candlestick closed, you can clearly see that at this specific moment in time, the market behavior indicates the awesome oscillator was in the process of crossing. The super trend line was clearly and distinctly red. The candlestick was steadily moving below the super trend indicator, and you can also observe that on the stochastic oscillator, the red signal line was positioned above the green signal line, indicating a potential bearish trend. And if I had entered a sell trade here, let's check together whether after 3 minutes our trade would have closed in profit or in loss. Suppose I opened a 3-minute trade here. This is 1 minute, 2 minutes, and 3 minutes. If I had taken this sell trade here using this strategy, you can see that our sell trade would have closed in profit. Now, let's carefully look at another interesting example together. Suppose I wanted to enter a buy trade here. The first condition for me was that for a buy trade, the candle should be above the super trend, and the super trend line should be green. So I have my first condition here. What was the second condition? The second crucial condition is that the Miller indicator, a key technical analysis tool, should be clearly green in color and precisely positioned above the significant zero line, indicating a positive trend. But as you can clearly see here, if we carefully consider this particular Miller, what has actually happened is that although the Millers are still showing as green, they are in fact positioned significantly below the crucial zero line. So I still didn't have the buy signal from the oscillator, while the stochastic was giving me a buy signal because the green line was above the red line. So I had the super trend signal. The stochastic was also giving me a buy signal, but the awesome oscillator's Millers still hadn't crossed above the zero line. When did this happen, and when did the oscillator's Millers move above the zero line? When this candle closed? Now, let's consider this very candle together. If I had waited for this candle to close and then opened a 3-minute buy trade, my trade would have closed here. A buy trade that, if you pay attention, you'll see would have still closed in profit. This candle is a bearish candle, but it didn't reach my entry point and closed above it. If I carefully erase these particular lines and then zoom in here a little bit more so that you can clearly see everything much better, you will undoubtedly notice that if I meticulously draw a new line right here, you can distinctly observe that this specific candle ultimately closed well above my initial entry point, and consequently, once again, our entire trade would have successfully closed in a substantial profit. Let's now check another illustrative example together, shall we? On a currency pair. Now let's carefully and thoroughly analyze this particular example here together. As you can clearly and distinctly see, this specific candle for a potential sell trade has indeed come down below the significant super trend line. And importantly, the super trend line itself is also visibly and unmistakably red, indicating a strong bearish signal. So the first condition for a sell trade in this strategy has been met. The second condition is that the bars of the SM oscillator indicator should be below the zero line and should be red. So look, the second condition is also met here. The third crucial condition is that the red signal line of the stochastic oscillator indicator should be clearly positioned above the green signal line and, importantly, pointing in a downward direction. You can readily observe that this specific scenario has also precisely occurred here in this particular instance. So if I wanted to open a sell trade here, precisely after this particular candle had completely closed, let's carefully observe what exactly would have happened. One full candle, then a second candle, and finally a third candle, and our entire trade would have successfully closed right here with a significant profit. Alright, I genuinely believe that's quite enough for now, and I have thoroughly shown you several clear examples for effectively utilizing this specific trading strategy. Now you truly have a powerful and professional trading strategy at your disposal that can completely and fundamentally change your entire perspective on binary options trading. If you found this video helpful, be sure to give it a like. Subscribe to our channel so you don't miss out on more tutorials. Send me your comments and questions in the comments section. See you in the next video.